Do this every week. We do our market update. I'm just going to move something on the screen here. So what we want to point out is what we were talking about earlier when we started, is that our market is going up. And if you look at the bottom there, what we've got highlighted in the second last row there is average price. You can see so far in March here, the average price is up almost 3%.
Yeah.
And that follows on increases in January and February.
Yeah, and don't let the numbers deceive you, because that 3%, you might be sitting there saying, wow, what's going on? Well, that's in different segments of the market. You have to remember the upper end of the market, it's lagging right now. So because that's lagging, it's going to bring down the average. We can tell you the bottom end of the market is booming right now. And when we say booming, it's up around 10%. Okay, so everyone has to understand this. Why is that market going so crazy? It's because interest rates went up. And if you were listening to Danielle, she's coming on very soon. If you've listened to Danielle, if you could afford $450,000 last year, a $450,000 home last year, you're more like in the $350,000 range. And if you're buying at $350,000 or you're renting right now, we all know rents are going through the roof, right? So the average rent on a two-bedroom condo, Tim, you were saying they're up around $2,000,
$2,200.
$2,200. So $2,200, what that gets you is very, very close to what it does. It gets you a two-bedroom condo with $600 condo fees right now, where you can own, and your mortgage is getting paid down. So you're actually creating wealth for yourself. So that end of the market is going to continue to grow. And that's why it's doing 10% now. So you can't just look at 2.69%. You have to dissect the under $500,000, the 500 to $1 million, and a million above.
Okay.
And then different property types, Tim. You have detached homes, you have semi-detached homes, you have townhouses, you have condos, and every different property type is moving along. And just getting back at that number of active listings, we say this every week. Yes, it does show 2,900 there, but out of that 2,900 today, there's actually 700 of those that are pending. So actually, if you're going out there today, you only have 2,200 of those properties to choose from. And out of that 2,200, about 800 are condos. Yeah. Okay, so you have to remember there's only 1,400 houses out there. So when we look at that, what we're looking for in investment properties, Tim, there is only really
the inventory in that is even smaller.
So you have to be patient. And Tim, you're saying this today. Our job as investment realtors is to protect you. Okay, we get all these texts, emails, phone calls. What about this property? I really want to see this property, and we're like, no, you don't. And the reason why we say that, and the reason why we can be so confident, is because we've seen thousands of properties, and where we actually guarantee to our clients that they're going to get the rents that we're telling them, and the property is going to appreciate exactly how we run the numbers. And so if we can't give them that guarantee, that peace of mind, taking away that fear that they're buying the wrong property and it won't work. I mean, we're buying properties that will rent out, Tim, 100% of the time and have tenants lined up to rent it. So if we can't guarantee all of that, we're going to say, no, we're not going to see that property.
Yeah. One more number that I want to zero in on is the new listings. If you look at the new listings for March of this year, so far we're at 615. Last year at this time we were at 1303. So we're only getting half of the new listings on the market that we were last year. Now what this tells us is we're not yet in the spring market. Generally every spring, once the weather warms up, people start getting that itch to move. They put their house on the market and the listings start to accumulate. Right now we're not seeing that. Now the weather may be a factor. It's cold and snowy still. But we're still waiting for that bump in listings so that we can get our investors in the car, get them out there, get them buying some properties. We're just not seeing that right now. And it may just be a lag in this year's market because of the weather, or it may be that interest rate effect. But we're going to see that increase no matter what. It happens, in big markets and little markets. The spring always brings more listings.
Yeah. If you go on our Facebook page, I posted a picture. Who's that congressman? Is it Bernie Sanders that was sitting on the side? They use him in the memes. Well, we used him in a meme today on our Facebook page, and it's got him sitting there with his gloves on, and it says, "Realtor is waiting for inventory to come on the spring market." So Pretty funny stuff.
Okay, so what we'll do now is we'll get Danielle DeMarco to come on. Danielle is our go-to mortgage person. We say this every week. She's so good at her job. She doesn't just get you a mortgage. She doesn't just get you a mortgage for your next house. She develops a real estate investing plan for you so that whether you want to accumulate 1, 2, 3, or many more houses, she can plot out a plan over the next period of time, whether it's 6 months, a year, 3 years, so that you can get to that number that you want to. And if you follow her plan exactly, then you won't see any bumps in the road. So without further ado, we will bring Danielle on. Where'd she go?
Can you guys see me and hear me?
We can see you now. Yep.
Can you hear
And
me?
we can hear you.
Awesome. Perfect. I'm in the car on my way to another meeting, so I apologize for the background here. But essentially, what I wanted to do tonight was just give you guys a brief market update. Tomorrow, the Bank of Canada meets again, so we are going to find out what the overnight lending rate is going to do. Predictions as of right now are we are hoping the Bank of Canada leaves the overnight lending rate where it is and makes no change at this time. So fingers crossed that that's actually what happens. And then anybody with a variable rate, obviously, if the overnight lending rate remains the same, the prime rate won't change. Therefore, your payment will remain the same as well. As far as fixed rates go, that's a little bit of a different story. So fixed rates, again, you guys have heard me talk about this before, but they're based on bond yields. They're not based on the overnight lending rate. As bond yields increase, we see rates increase. And as of December of this last year, December 22, we saw rates come down quite a bit by about a whole %. But since about February 20th, we've started to see interest rates climb back up. So we were low 4s to mid 4s. And in the last couple of weeks, we're now mid 4s to high 4s. And there are actually a couple of lenders that even went over 5% on high ratio mortgages. So what is that saying? It is saying that we're pretty stable as far as economy goes, according to the banks. They're starting to see and push those interest rates back up a little bit. Do we see them coming down anytime soon again? Not really. As far as rate drops go in 2024, a lot of people were predicting, end of 2023, we're going to start to see rates come down. But now we're seeing that pushed out a little bit, and we're kind of anticipating mid 2024 to see those rates come down. So the timeline has adjusted a little bit, not a ton, but a little bit. Now, what does it mean for you as home buyers and investors? Like Tim and Azad mentioned before, rate isn't everything. So on that condo, for example, even with rates where they're at right now, even with condo fees, even with property taxes, those clients are still positive cash flowing. So while rates have gone up a bit, the rental market itself has also gone up. So we're still being able to positive cash flow on a lot of different properties, including condos. So as far as rates go and qualifying goes, as interest rates go up, the stress test qualifying rate also goes up. So for anybody that's house hunting, you obviously know it's a little bit difficult right now. There's not a ton of supply like Tim and Azad mentioned. So ideally, if you can, you want to get a pre-approval that comes with a rate hold. Sometimes we can do it, sometimes we can't, depending on the lenders we fit at. But ideally with that rate hold, you're not just locking in an interest rate, because again, rate matters, but it's not the most important thing. But what you're locking in is the stress test qualifying rate. And that stress test qualifying rate tells how much you can spend. So as rates go up and that stress test rate goes up, if you're not locked in and that stress test rate goes higher and higher, all of a sudden the amount you can spend starts to go down further. So we want to protect you while you're house hunting to make sure that what we've qualified you for and what you're house hunting for, you can actually get approved for once you write an offer. So it's really critical in a rising rate environment like we're in on the fixed rate side of things that we get pre-approvals done and we try and get rate holds done as well so that you can confidently shop for houses. And again, like Tim and Azad mentioned, mortgage terms and other things are just as important as interest rate. When we're looking at your overall financial plan, and let's say you come and you say, hey, Danielle, I want to buy 4 properties in the next 5 years. part of that plan is saying, okay, we're going to start with this lender and then we're going to move to this lender and then this one and this one. That means we're going to take a rate of this and then of this and of this. So it's not always about, I want the best and the lowest rate. What lender is that? We want to come up with a plan on how you can accumulate those properties and which lender we want to use in which order to maximize your purchasing potential. So again, as an investor, yes, rates are not as low as they've ever been, but we're really not going to see them get back to where they were the last few years for a very, very long time. Mid 4% is where we're going to be, mid to high 4%. So as long as your property can cash flow at today's rates, you're going to be totally set. And Tim and Azad have a lot of properties that they're seeing that are going to positive cash flow at today's rates. So we really need to focus on the mortgage terms and the plan itself as to what order of what property and what order of what lender we want to be using. So my recommendation, don't try and time the market. I've said it time and time again, it fails. Like they mentioned a year and a half ago now, today, as compared with today, we're down about 140 to 150,000 in qualifying. So people who tried to time the market and are now purchasing now when they could have purchased 8, 9, 10, 12 months ago, they're now in a different price range than they were before. So the important thing really is as soon as you're ready to purchase and jump in, actually do it, jump in. You're never going to time the market perfectly, and you might actually out time yourself out of the market if you continue to wait. So getting those pre-approvals with a rate hold, so we lock in the stress test rates and don't try and time the market. Make sure the amount that we can spend is locked in for you, and that's my tip for today.
Awesome.
All right, thanks, Danielle.
You're welcome.
Anybody who wants to get a hold of Danielle, her contact info is there. I believe she'll throw it in the chat before she leaves. And if you want to even just an update on where you are financially, give her a call. She's more than happy to give her opinion on where you are right now.